Heaven knows you have earned lunch. So we are going to break at 3:30. We're going to get back together in smaller groups to talk about the future of the Atlantic Alliance, the outlook for Latin American economies, a digital deep dive, take a look at each of those things. We'll do those in breakout rooms. And I hope that over lunch you'll have a chance to eat and to meet and to reflect on what you've heard. At the end of the morning, typically, and I hope you'll indulge me just for 2 or 3 minutes to try and pull together the things that we've heard. As I said at the beginning of the day, I hope that we would come away with some silver fish, a few moments where you're like, aha, I see better what's going on, and ideally a set of how we might handle things and look at things more constructively. I scribbled some notes. I scribbled them, if you like, in 3 areas. One is around the monetary, one around the regulatory, and one around the fiscal. And the reason for that is Anna Botín started the day by saying, let's not succumb to a cloud of pessimism. I think we've got to be honest with ourselves. We don't want to succumb to a cloud of pessimism, but we don't either want to indulge in false optimism. And you can't but meet in these circumstances with the US Fed and the UK Bank of England making historic increases in interest rates and not think to yourself, something very profound is shaking the world economy. And having heard at the start of the day, it made you think about some of the deeper fragmentation that possibly we haven't looked more closely or need to look more closely at. And for me, those were around 3 things. One was, I thought that the point that Dr. Obi made, and in fact Jose Linares made, around the north-south divides, whether those are around interest rates or the response to COVID, but obviously around climate, was really profound. I thought that the fragmentation, or at least the divergence that's institutional, I thought the exchange between Andreas Dombrit and Sylvie Goulard around the need for a harmonized view on monetary and fiscal ambitions, and yet the reality that that's incredibly hard to do, and if anything, is looking a little more divergent. And I thought the point that Roberto Campos made in a very sort of gentle but clear way about the divergence between what is policy, what's happening with interest rates, politics, and people. When you look at the results from the Brazilian election, or you hear the comments of Jay Powell overnight, or the Bank of England just now, you realize that people are facing really significant pressures, which will put pressures on politics, which will put them at odds, obviously, with some of the things that we want to do in policy. So that was the let's not indulge in false optimism section, interest rates and monetary. On regulatory, for what it's worth, I thought that we heard today a tone that we haven't heard before, a tone that seemed quite different. Not a decision, but certainly a change in the tone of the debate. And what I mean by that was the point that Jonathan Hill made at the start of his session about not finding ourselves setting the terms of the 2022 crisis simply in the terms of the 2008-9 crisis, not fighting the last war. It felt to me as though almost everyone in the room was interested in having that debate. And it was striking that Anna Botín said banks are sound. It was striking that Andreas Dombrit, when he was asked, said, look, I'm not worried about banks. There's technology issues, there's shadow banking, but actually, and even from the governor of the Bank of Spain, this sense of solidity, the sense of strength in the banks, that is a very profound difference from where we were 14 years ago. And I think it speaks to the need for a regulatory debate that's just beginning about what's needed for growth, what's needed for a regulatory environment for growth in the 2020s. And then the third area, the fiscal. I have to say that this is the area that I come away the sunniest, the area where I was the most surprised and encouraged by what I heard. I thought that what Larry Summers said there about the shift from the invisible hand to the heavy hand to the helping hand, and then the specifics about that, I suppose, in 2 ways. That not only are we seeing, whether it's through what Johannes Hahn described in the Next Generation EU, big government action to invest in the economy, and in the process, create new marketplaces, particularly around the green industries, but also around, as we heard, the new technologies around finance that were discussed in that Future of Money session. But specifically around the creation of new marketplaces in green industries, and then to hear Walter Schalke talk about how that works in a colossal industry that is changing at a rapid pace. All of that made me more encouraged, more optimistic than I expected to be at the beginning of the day, that I was prompted to take another look, and perhaps just hearing Larry Summers say we're not going to return to an era of secular stagnation gives us a reason to head to lunch. And I can tell you, better weather outdoors than when you came indoors with a skip in our stride. So I hope that that gives you a sense of, at least in my notebook, what I took away from it. And I took away, I suppose, in the simplest term, a mixed picture. Larry Summers is long banking stocks, short Tom Brady. That's good news if you're a banker, but I'm sorry to say it's very bad news if you're a fan of the Tampa Bay Buccaneers. Have a very good lunch, everyone, and thank you for joining us this morning.